Do you have the right tools for mortgage lending in 2015? And do you know how to use them? Mortgages in 2015 are very different from anything that you've seen in the past. If you make a mistake, you may not be able to fix it. Do-overs are a thing of the past. Putting your mistakes in your portfolio may not be an option either. In a recent independent community bankers survey, it was noted that 73% of respondents said that regulations are inhibiting mortgage lending, and an even higher number, 76%, said that they've had to increase dedicated mortgage staff over the past 5 years. An even more revealing finding was that a significant percentage of community banks are no longer active in the residential mortgage market, are considering an exit, or are exiting the market. This alarming trend in community banking can be reversed with the right mortgage partner, but you can't use the same old tools to make a mortgage in 2015. The tools needed for 2015 may look like the same old tools, but they now have a completely different meaning and dramatically different use. These tools are, of course, technology and compliance. Let's look at each and see what you need to make them work for you. In the past, a lender would buy a loan origination system, an LOS, and pretty much had all the technology that was needed to manufacture a mortgage. The LOS would keep track of the mortgage process, and they were able to generate enough documents to process, underwrite, and even close a loan. Now an LOS needs to be far more sophisticated and be able to merge numerous separate and distinct resources just to give a lender a chance of producing a loan that is compliant and saleable. An LOS today needs to integrate in real time credit information, automated underwriting, private mortgage insurance, state-sensitive disclosures from start to finish, along with state specifics, flood insurance, ever-changing appraisal data requirements, pre-close and post-close quality control, ever-expanding investor loan delivery data, file requirements for loan boarding, and document imaging and retention, just to name a few. The second and equally important tool is compliance. In 2015, you'll need to be an expert in TILs, GFEs, HPML and HOPA, rate locks and change of circumstance, appraisal disclosures, HMDA, fair lending, high-cost loans, loan officer compensation, and there are a few more major changes coming later this year. The difference now, if you miss a step in the process, some things can be fixed and some can't. And violations could put you in jeopardy of penalties, fines, and reputational risks. But the reality is, community banks are finding it difficult to keep up with the investment and knowledge required for today's mortgage market. Increasing costs plus increasing risks does not sound like a prudent business strategy. There must be a better way to satisfy your customers' mortgage needs. And that is where QR Lending enters. We can open the door to all of the latest integrated technologies. We have the compliance knowledge. We overcome challenges every day, and our staff is well-trained and works with you. Good afternoon, and welcome to QR Lending's Tools for 2015 webinar. Our featured speakers today will be Patrick Blawat, Senior Loan Coordinator at QR Lending, and me, Denyse Behnke, Correspondent Coordinator at QR Lending. Together we have more than 30 years of experience servicing community lenders, and we have been with QR Lending since its inception. Both Patrick and I deal with numerous lenders on a daily basis and are dedicated to providing them with personal service and attention as well as the customers they serve. Patrick, why don't you tell our audience why choosing QR Lending makes good sense?
Simply put, we're the right partner with the right tools. But this combination didn't happen by chance, and yes, more than a few thought that building a mortgage company in 2005 was a little crazy while established mortgage companies were going out of business. But we had loved working with community lenders, and we had become a part of the culture. So when our former company was sold, we knew that we needed to apply what we had learned and create something better for the community banking community. And we did. QR Lending can lend in all 50 states with all of our channels of business, all of our mortgage products, including FHA and VA loans, contract services, private label subservicing, and our full appraisal services as well. And QR Lending is a division of First Federal Bank of Florida. When we built QR Lending, we knew that one size does not fit all. So we created a business process and the technology to support the varied needs of the community banking market. We developed this process in 3 easy steps. I guess they all seem so obvious that we kept asking ourselves, why hasn't anyone else ever done this? The first step was to build a technology platform that you, our customer, could use to originate mortgage loans. Why should you be required to buy and maintain a loan origination system at great expense and risk when you can use ours for free? You can originate loans for your customers from our complete menu of products, including FHA and VA loans. But what can you do with this free technology? Well, you can do all required disclosures in our system. You can pull credit and score loans through LP, which is Freddie Mac's automated underwriting system, if you choose. You can service the loans, or QR Lending can do any or all of these functions for you. But what if I want to originate a loan for my portfolio, you may ask? Just use the same system that you use to originate loans that you sell to QR Lending. There's no changes, and it's totally transparent to your borrower. And if you want to sell that loan to another investor, go right ahead. We even offer loan delivery options to others, including Fannie Mae, Freddie Mac, and the Federal Home Loan Banks. The second step was to build a better operations model and eliminate calls to multiple people for each step in the process. How about calling one person for everything? That's one phone number and one email address. A dedicated loan coordinator to help you with all of your loan needs. There's no calling the pricing desk, the underwriting department, the closing department, or even the appraisal department. Just one person for all problem resolution. And of course, there's no call centers and no start-from-scratch conversations. You're talking to the same person every time. The third step addresses the one-size-fits-all business model. So let's break it down and talk about who does what. You take the application and develop the relationship with your customer. You offer your menu of other financial products and services. Keep in mind that QR Lending offers no other financial service products to your customer, so there is no cross-selling ever on our part. Your loan coordinator backs you up every step of the way in the mortgage loan process. Your loan coordinator can score your loans, lock the rate, handle the appraisal process, have the file underwritten, satisfy conditions, and schedule and coordinate the closing. Or you can do any or all of these functions if you wish. Many of our banks use multiple channels. They might be a correspondent on conventional loans because they're comfortable doing most or all of the work themselves. But they'd like to use the wholesale channel for their FHA loans because they want us to do more of the work, especially the underwriting. And for that customer that's buying a second home out of state, they have QR Lending do everything from start to finish because they're unfamiliar with that state's lending or servicing requirements. When you make QR Lending your mortgage partner, you get our great service regardless of your volume. Whether you do 2 loans or 200 loans every month, you get the same technology, the same competitive pricing, and the same unsurpassed support from our loan coordinators. And we do have lenders at both ends of the spectrum, from 2-person mortgage departments to nationwide lenders. Well, Denyse, how about lifting up the QR Lending hood and showing what really makes us run?
Great idea, Patrick. Earlier, we mentioned a number of functions that your technology needed to perform in 2015 to make a mortgage properly, and the numerous regulations that you must follow in order to be compliant. When you choose QR Lending as your mortgage partner, you get a lot more than just a dedicated staff in Madison, Wisconsin. We've done all the heavy lifting so that you don't have to. We have integrated multiple resources to ensure that your mortgages are done quickly and accurately. Some of the companies that we rely on would include PC Lender, Equifax, CoreLogic, Credco, Kroll Factual Data, CBC, ArchMI and MGIC, Freddie Mac LP, Fannie Mae, both DO and DU, FHA and VA, Doc Magic, Loretta Flood Insurance, MERS, LoanCare, Interthinks, and the QR Lending Appraisal Compliance System, all effectively integrated into one package for you to use. But since we've been doing mortgages with community banks for quite a while, we would like to share some of our most frequently asked questions, and maybe we will touch on some things that concern you. Question 1. What if we need you to do our processing, underwriting, and closings on loans that we sell to Fannie, Freddie, or the Federal Home Loan Bank? Answer. QR Lending does perform all of these functions for some of its direct seller servicers. Each of our services is available on an a la carte and also on an as-needed basis. Question 2. What if we want you to do our appraisal compliance service because we're not happy with the AMC we are using? Answer. QR Lending can offer its appraisal compliance services in all 50 states. We encourage you to have your local appraiser sign up with us. Approved QR Lending appraisers get paid their full rate, which is why they love working with us and give us great service in return. Appraisal orders are totally automated in our online system, so only a DU 3.2 upload is required, which means there is no manual entry of appraisal orders. And you're assigned a dedicated appraisal coordinator. Question 3. We want to offer FHA and VA loans to our customers, but we don't have any experience in government loans and they seem so complicated. Answer. We don't expect our lenders to be experts, which is why your loan coordinator is. Your coordinator can answer any and all questions you have regarding scenarios, processing, disclosing, and funding. Training is an essential part of what we do, and your coordinator will ensure that you have an understanding of the government loan guidelines before selling the program to a customer. Once you have an application, again, your coordinator tells you exactly what you need to obtain from your customer for underwriting. I think everyone will agree that government loans can be tedious, but your loan coordinator removes the uncertainty for you. And now, I would like to turn it over to Patrick for the final frequently asked question.
Thanks, Denyse. With the huge amount of negative press regarding servicers, it's no wonder that this is the question that we hear the most. Servicing loans in-house for ourselves and our investors is expensive and overflowing with operational and compliance risks. How do we maintain our customer connection, remain compliant with regulations and investor requirements, and not have to worry about service levels? Well, the simple answer is yes. We can help with this too. A private label subservicing program from QR Lending strategic partner LoanCare is the answer. But before we talk specifics on the benefits of subservicing, I would like to give you a little background on our own subservicing experience with LoanCare and why QR Lending chose LoanCare to be its strategic partner. In 2005, QR Lending teamed up with LoanCare, a service-linked company and part of the Black Knight family of companies, to subservice its own loans. And over the last 10 years, we have continued to grow our relationship with LoanCare. They now handle over $3 billion in Fannie, Freddie, and Ginnie Mae loans for us across the United States. LoanCare has grown as well since its beginning in 1991 and now subservices over 550,000 loans in all 50 states and is the third largest subservicer in the nation. QR Lending is proud to be able to provide LoanCare's best-in-class subservicing program to its clients. LoanCare's goal is to help you brand your name on the subservicing program so your members don't feel like they're being outsourced. LoanCare is flexible and offers several private label packages, from simply placing your name and logo on the monthly billing statements to branding the borrower-facing website with your image and color scheme, to private labeling the other aspects of servicing. Choose the program that's right for you. With greater emphasis on your name, LoanCare's private label program promotes the relationship between you and your borrowers. But before I leave the topic of subservicing, I'd like to make 3 quick comments on why subservicing is a good idea. Subservicing is typically less expensive than servicing loans in-house. And also, when the servicing of a portfolio is transferred to a subservicer, the operational and compliance risks are also transferred to the subservicer. And remember that LoanCare is a subsidiary of Fidelity National Financial, Inc., a publicly traded company on the New York Stock Exchange under the symbol FNF. In addition, you and your customers have the ability to gain access to advanced servicing technology without lead time and developmental expense. You will be a part of a robust private label program that will keep your name and image in front of your customers at all times and will aid in customer retention and repeat business. You can expand your mortgage business without expanding infrastructure, and customers can make payments in a variety of ways, including ACH, paying online, and paying at your branches, all leading to an enhanced borrower experience. Simply give me an email or send me an email or give me a call if you'd like more information and a no obligation bid. Sharing our success stories is important. Here are 2 typical stories of how we benefit community lenders. Stan is with Resource Bank in DeKalb, Illinois. Although Stan has worked with a couple of larger investors, he has found it beneficial for himself and his staff to be able to develop relationships with who they're working with. This helps to create a more efficient process. When working with QR Lending, the bank knows who to go to with questions. They know they will get a quick turnaround. Not to mention that QR Lending offers the flexibility he needs with his portfolio loans. Carolyn is with Caroline Alliance Bank in South Carolina. Carolyn was working with Taylor Bean and Whitaker up until they abruptly closed. Carolyn was left with loans in the pipeline and didn't know where to go. She contacted QR Lending, discussed their current situation, and we had the bank signed and trained within a few days. We immediately started working with Carolyn to get her loans through underwriting and closed in a short amount of time, preventing any fallout or frustration for her borrowers. If you're wondering, what do I do next? Well, you could call Denyse, Mike, Sherry, Kathy, or any of our loan coordinators, but maybe you should just start with me. My name again is Patrick Blawat. My contact information is displayed on the screen. Please feel free to give me a call or send me an email. As a follow-up to today's webinar, you'll receive the names of a few of our customers. You may want to chat with them to get a first-hand idea of what it's like to work with QR Lending. You'll be very happy that you did. Thank you for spending time with us today, and have a great day.